Hi traders, welcome to this video on the euro dollar and an update of the January performance. We're going to discuss everything on this 1st of February. We'll also take a look at the pound USD, of course. So let's do that first of all. All right, euro dollar weekly chart. We had a retracement, a bull or bear flag, sorry, that went into the 21 EMA and basically bounced at that resistance zone, broke through or below the bear flag pattern with a good breakout and has made a lower low after that. Basically, price has not reached the target that I have in mind at the round psychological level of 110. So that still leaves the door open for more downside in my view. Of course, we got to be, of course, on guard as well for a unexpected earlier reversal. And let's take a look at the daily chart for that. But the monthly chart, more or less quite bearish, I would say. The close not as close to the low as I would like, but ultimately a bearish candle, and clearly below 20 HMA is bearish as well, and there's plenty of space still to test the previous low here. And even if this is a higher low, there's still a lot of space before we get close to the bottom, the previous bottom. And of course, as I mentioned last time, this could easily be some kind of triangle pattern, A, B, C, D, E, and a downside break seems more like most likely, but in theory could also be A, B, C, D, E, and an upside break. For the moment, I would say, considering the fundamentals, a downside break seems more likely. But a bounce here, if it is A, B, C, D, E, and then a bounce here to finish the wave V like this, seems likely at this moment. So let's go back to that weekly. So far, a bullish start of this week, but it's an open candle. We see why we had a doji Friday, I believe. Yesterday, a bullish candle. So bullish start, but if we look at the 4-hour chart, I think we're getting into a strong resistance zone. And if we put the fib from here to here, we're at the 61.8 fib. That's a bit deep for a wave 4, to be honest. But I was thinking that on my one-day waves that this could be wave 1 here or here, wave 2, and this is part of a wave 3, 4, 5 pattern. This is still valid, although the wave 4 went obviously a lot higher than I expected. That said, it's still not invalid because for this wave 4 pattern to be invalid, price would have to go above this level. And then that particular pattern is out of the window. But for the moment, it's actually going back into the resistance zone with these bottoms now broken here. That could easily be a bouncing spot. For this to be a wave 4, though, I would like to see some kind of triangle pattern, perhaps, and then a break to the downside. So in my view, this is a resistance spot where price could easily make a bearish bounce. But because of the strong upside, I would have a very close target, in my view, of let's put the fib from here to here on this swing because it's such an aggressive bullish swing. My max target would be at 111.55. That's the very max, maybe even 111.80. As a kind of bounce reversal trade back into those fibs, but those could be easily bouncing fibs for upside as well. I would not aim at 110 for the moment, unless price is clearly building an A, B, C, D, E pattern, and then after the E is finished, or after the breakout, of course, then in that case, it's okay to aim for a lower low with specifically the target of 110 in mind, in my view, because of the round level and the 78.6 fib on the weekly chart. So yes, a bounce here, a bounce up is expected, and then it depends. We'll get a higher low, sorry, a lower high, or not. If we do, a triangle pattern is very likely. If we don't, then this might be more bullish than I expect, and there could be something else going on this daily chart. Maybe a reversal is taking place, or in any case, the bearish swing is over earlier than I expect, and we might be looking at a bigger retracement. Okay, maybe there'll be a head and shoulders pattern eventually. But as you can see, the head and shoulders patterns are going to take time. It's going to take a couple of weeks to play out here at least. So that's not going to be probably very quick to take place. But yes, a break above this zone here at 113. These long-term moving averages, these bottoms would certainly make things more bullish and would throw that bearish analysis out of the window, to be honest, and invalidate it. All right. Otherwise, I don't have much to say, but I think that also here the 144 EMA, 233 EMA zone on the 1 hour chart, these long-term moving averages typically are resistance and a strong bouncing spot as well. So that's another factor in my view. And you can see a break above the 21 EMA here would be very, very bad for the bears and could be good for bulls for a move back to this bottom and the 144 EMA and the 115 round level. All right, pound USD. Yeah, made a strong push up, strong retracement back down to the, I think it's up about 61.8 fib. Now bouncing up again. Definitely pound a bit different than the euro, stronger. Euro dollar has been weaker. And this is looking more like a head and shoulders pattern with a strong surge up. But this is also pretty strong surge down. So I wouldn't be surprised if there's a zigzag here to the 78 and then still a bounce up to the minus 272 target. I think that these zigzags and strong impulses up and down could easily remain on the pound USD. It will make it a little bit tricky to trade. But if you do catch a price swing on the pound, could be quite lucrative as well. So might be worth the effort here because the price swings are quite impulsive. So something like this wouldn't surprise me, and then down. But considering the impulsive environment, I think waiting for candlestick patterns to confirm any bounce and turn around, maybe breakout even, makes sense. So I think some caution is warranted, but yeah, if the candlestick pattern shows a reversal, could be interesting to try it maybe with some small risk for an interesting swing and reversal, hopefully. All right. Otherwise, yeah, basically Bitcoin just below 40,000, downtrend, pretty strong at this moment, but it could be at a bouncing spot. Maybe a lower low to hit the 144 EMA wouldn't surprise me at this moment. That's what my wave analysis showed yesterday, at least. And then a bounce up. This could be a wave one, or A, I should say, A, and then ABC up for B, and then down for C. So a little bit of a lower low, and then an ABC up, and then again a swing down is what I expect. If we don't get the lower low, we might get an ABC right away, and then I expect a downswing. Same for the US market, the stock market, but it broke to the upside, so I was wrong on that. My wave analysis was not accurate on that one. I actually had the week before this completed as a 5-wave. Yesterday I turned it into a 1, 2, 3, 4. So far it's not doing that. I wouldn't say maybe wrong is too harsh because it has to go above this level to invalidate it, but it doesn't look good at this moment. It looks more bullish, and I would say that it seems unlikely that this is a wave 4 with a wave 5 down. So more accumulation at this point than I expected. Maybe the fact that the Omicron variant is not as dangerous as expected, maybe a factor, who knows, but it's breaking to the upside, so that is a that is a bullish signal for the moment. It is running into a lot of resistance though, so I don't think it's a great spot. But if it makes a retracement, I would say at this moment there's more likelihood of a bounce up at support than a break to the downside, considering the break up. That's just my technical view at this moment. So it's a little bit of a change compared to yesterday because of the break, of course. Gold hanging in there, going sideways. Not much volatility, hanging around 1800. Triangle pattern. Ethereum following Bitcoin. So that's about it, I think, for the moment. Let's take a look at the performance in January. Okay. All right. First of all, an update that we have launched ECS Athena EA. That is available on the Elite Currency website, and it's a great strategy with very consistent results. It's a little bit more aggressive than Zeus EA, I think. So on average, a little bit more risk, but also more return on as well. So far, we've seen. So I'm happy with the trading. I'm trading with an account of 20,000 euros and one account with 30,000 euros. ECS in total is trading even more than that. That's just my own capital. But that's why I also am sharing my own capital accounts. I have two accounts basically trading this 20,000 euro account since August 2021. And that's now about August, September, October, November, December for 6 months now. It's up 91%. And the monthly gain has been about 11.4 on average. That could go up or down depending on how aggressive I just the settings you choose. There is some variation in that, so traders can go lower with lower risk or can go higher with higher risk. So there is some choice in that. I am choosing a more conservative risk approach with this account now. In the past, it was a little bit more aggressive, so probably the average return will go a little bit lower than 11.4 because I'm a little bit more conservative now. Whereas I just opened a second account that's supposed to be more aggressive in beginning of mid-December with 30,000. So that's why I shifted that to making the first account more conservative, because I have now a second account that is being more aggressive. So I have both a conservative account and let's say an aggressive, medium aggressive account. This medium aggressive account after 6 weeks is up 11.2% with an average of 7.4% per month. Equity curve looks pretty good, as you can see. The drawdown has been less than 5%. This drawdown here is not from this EA. That was from a previous EA, Ultimate EA. So it's the same account, therefore you see that high level, but that's from a different period of time. Profit factor 1.8, as you can see, Athena EA after a great start in 2022 with plus 5.8. 2021, as you can see, had great results here a few times, 3 months in a row, 15% and more. All right, here the second rental account, even higher profit factor. It's of course a shorter time period, and this is a little bit short of a track record, so let's not review it too much. But off to a great start. Let me say it this way: we also have PAM, that is no cost up front, but you pay a profit share as per month if there is a profit to share. Of course, there has to be a new profit. And this has also just started and is up 2%. So we'll keep an eye on this every month and see how this progresses. You can also keep an eye on my FX book with Elite Currency, of course, and keep an eye on these links yourself. So this is a new EA. We have been trading the EA in total on the very first account for 1 year. This is actually account number 2 and 3, and PAM is the fourth account. If you're interested in trying it, elitecurrency.com, click on Athena EA Live Now or Products, and then click on Athena EA. If you want to rent it or buy it, you can click here on the left. If you want us to manage it through the PAM with the profit share, you can click here. This is free at no upfront cost, but you pay a profit share. This is no profit share, but you pay a fee at the start to rent or buy it. So yeah, I hope that you think this is maybe something for you. If not, no problem. But if yes, hopefully it does just as well as for us. It is fully automated, and so the results should be quite similar, depending, of course, on the risk profile you choose. But all of that is explained in the manual, and you can even let us decide that as well if you go for rental. I mean, you can decide the risk, but we would implement it if you choose the rental one as well. So yeah, that's the newest news in February. A great start for Athena EA. Let's take a look at some of the other results. ZUSIA, steady as it goes as always, with February profit here plus 3.3%. The PAM, very steady. The rental, about 3.2, I think, very steady as well, plus 115 in 1.5 years of trading, a little bit more than 1.5 years. So ZUSIA, a great month again. SWAT EA had a negative month, about minus 6.5 on the DAX, 6.4. Small little retracement at this moment, up though 67. Almost a year, mid-February, it will be a year, plus 67. And portfolio, a little bit slower start in January because of the slower markets for this system at least. But yeah, had some, again, a positive month, though, on the flip side, but small one. So we hope to see, of course, some more robust gains in the first half of 2022, as I mentioned already at the end of last year, that the drawdown is low, but we want to see some better performances soon in the first half. January didn't show that yet, but there were market circumstances for that, so we're going to be patient and wait for February, March, and the first half. Okay, so patience with this, but I think it has a lot of potential in the long run, and is, from my point of view, very consistent and the least risky, in my view at least, compared to ZUSIA and Athena EA. So for those risk-averse traders, I think that personally, this is a good choice because it is less risk-averse. It is more risk-averse, sorry. There is less risk, sorry. All right, that's it from my side for February. We'll be back with a new video like this, update on the euro dollar, pound dollar, and the markets in general, plus the performance in February at the beginning of March. Wish everyone great trading. Hope to see you as a member, either Portfolio, Zeus, Athena EA, if you're interested in automated systems, or maybe check out other things like our SWAT course or other signals such as options from Marco Doni, our CNBC contributor in Italy. Wish everyone great trading. See you soon. Bye-bye.